Ashish, for joining us today on Let's Talk Business by RealtyNXT.
Thank you. Thank you so much, Kritika, for having me here today. So look forward to it.
So before we begin and before we dive into the finance of world of real estate, let's talk about you. Let's begin to know about your journey, how and where the origin story of Certus Capital started, and what made you notice in the market the certain need or the gap that you thought this is where you want to begin the Citrus Capital journey.
Yeah, so we started Certus Capital about 5 years ago now, in the middle of 2018. And honestly, I think it was a little bit in the building while I was at my previous job, which was at KKR, right? So I will just rewind back before coming to Certus Capital and what led to it. But so real estate is not something that I decided to do when I was in my college or when I started my first job. I had actually absolutely no idea that real estate is a sector that will become my profession. So I was just a finance professional. I'm a chartered accountant and a MBA from ISB by education. And after that, I just started as a generic investment banker with Ernst& Young, moving on to Kotak. This is way back in 2004, 2005. When that happened, incidentally, that time period coincided with when real estate sector was opened up for foreign direct investment. That happened in 2005. So while being at these organizations, we started doing some transactions that happened in real estate as a sector. That was quite intriguing. It was a new sector. There wasn't much information about it. When we were at Kotak, we tried to reach out to our partner Goldman Sachs as to how it is done globally, started scouting for investors who, most of these guys, including the Blackstones of the world, were not present in India. So it kind of started that way. One of the first deal that Morgan Stanley did in India, I was the investment banker on that from Kotak side. They closed that transaction. They didn't have a team in India. So they said, okay, now we have done this deal. You any which ways were involved in this deal. Why don't you come on this side? And then that is the time when I actually became a focused real estate investing professional. So that was an interesting journey. We went through our own ups and downs. The GFC happened, changed the whole sector in a meaningful way. A lot of investors came in a very short period of time and also exited in a very short period of time. And we were doing a bunch of things. We were doing uh, operating companies like Oberoi Reality as a pre-IPO investment. And then I think suddenly a lot of things changed. Suddenly things started becoming more defensive. People wanted to do structured finance. That's what we started doing. And then came the opportunity where actually KKR and GIC, they came up with this idea to build a specialized real estate lending platform for in the form of an NBFC. And I thought it's a very interesting idea. I mean, I was in the mid 30s at that point in time, and I thought it's a great opportunity to work with these great organizations and build a platform which is just a business plan right now, right? So that's how I kind of moved to KKR in 2013. And over those 5 years, we did about $1 billion, and suddenly again the sector became very hot. Like, as you would know, that between 2016 to 2018, before ILFS crisis, it was an extremely hot period where too much money, too much debt capital was chasing it. So that was a good experience in terms of when you can move forward fast and then when you have to step back. But in over this 10 journey between these two organizations, I did realize one thing, that foreign capital is still mostly suited for buying assets in India. They're not that much there for development. In India, like if we do 40-50 million square feet of office in a year, we do about 350 million square feet of residential, right? And that development needs capital. So the idea was, and incidentally, in Morgan Stanley, I had a chance to be very early when they were just starting the team. KKR, it was again a situation where the business didn't exist, and I had to go there and start that. So it inculcated that desire and that interest to build businesses as opposed to just be an investor. And that's where I thought that, okay, now we have done it for these organizations, can we do it for ourselves? So when I left, the idea was to actually build an integrated real estate capital solutions platform. That's how we started Certus Capital in 2018. we have been on that journey since. Yeah.
I'm sure you must have faced challenges in the initial stages of Certus Capital.
Yeah.
How did you overcome those challenges?
Yeah, I mean, and we still face challenges. I mean, we are still 5 years old, and I think these 5 years has been, in that sense, almost unprecedented in a lot of different ways because not only because it was my entrepreneurial journey. So, of course, when you don't have the umbrella of these big brands, there's everything from finding that office to open that office every morning to finding your first employee and to creating your own email setup. Like, it's just not there. So that is one kind of a challenge, which is fine. Every entrepreneur goes through it and you fix it. But also the environment suddenly was dramatically changing. 2000, middle of 2018 we started September, and we started to build an NBFC. It was like a KKR 2.0. We had some investors lined up. Then September 2018, you had ILFS happening. So from a completely capital awash environment, you had an environment where there's no capital. Every NBFC is scrambling for capital. So we had to change 360-degree literally overnight. We had to throw out that whole NBFC building plan out of the window and then start thinking about what the environment is. So we actually pivoted very quickly to then actually helping NBFCs get capital from foreign investors. So the first transaction that we did in Jan 2019 was to sell some of the loans given by DHFL to Bombay Dyeing to this large capital fund, or the opportunistic fund called Oak Tree Capital. That was a 1400 odd crore deal, right? So that was the first thing. It allowed us to get discovered as a new organization, and that was the need of the hour. So we built on that strength. And then suddenly, I mean, we are just 1.5 year in our journey, and COVID starts. So then all the work we were doing was with foreign institutional investors, and suddenly you can't travel for almost a year, right? So then again, things changed. By the time we were finishing 2020, markets were starting to rebound, right? So I think we had a lot of these challenges. I think what has kept us in the flow is we had been constantly trying to read what is the need of the market and changing our strategy accordingly. Like today, globally, we are facing a lot of concerns, pressures. Yields have gone up, interest rates have gone up. US just got downgraded from AAA to AA. But domestically, things are going great. So we have over the last 2 years actually started focusing a lot on domestic capital flows as to only foreign capital flows, and that has allowed us to build this new business that we call Earnest.me, where it is channeling domestic capital for the exact same expertise that we had been otherwise working with on foreign capital.
So talking about Earnest Me, could you tell our viewers also a bit in more detailed manner what is Earnest Me
Right.
and where you felt that this platform is required and that's why you launched this platform?
It came out based on a certain belief that we held, and we didn't know how to solve that problem. So what happened was, after going through this 2.5 odd year journey, end of December 2020, when we were sitting back and reflecting as to what it is, where things stand, and what it looks like, we have in fact actually released a research paper, right? And in that research paper, we have come to this conclusion. It was carried by VC Circle also, so it's there in the public domain. We had come to this conclusion where we said that we are ripe for a rebound in the real estate sector, right? At the same time, we only have access to right now very expensive foreign capital, which can solve very small portion of the need. Domestic institutions are fearful at this point in time, and they are not participating, and they always had their own challenges in participating in real estate. So we just don't know. There is this $100 billion gap, which is what we sized, and how will that get fulfilled without domestic participation? This is where we, I think, kind of did this paper. We had no idea, we had no thought of Honest.me, and we kind of went on our December end breaks. When we came back after that, and I think maybe some of this was at the back of your mind, we said, why can't we create something afresh which will allow domestic investors to participate in the story in a far more meaningful, a far more transparent way, easy way, you know? And thankfully, by this time, there was a lot of fintech education about managing your personal finances well, education about different products beyond your typical mutual funds and FDs was starting to happen. So we benefited from that. And in that context, then we started this development just on hunch and on this premise of this opportunity. We started building Earnest.me. It took us our entire 2021 to kind of build the framework, build the underlying tech, build the thought process, build the regulatory framework in terms of doing it. And then we actually went live in January 2022. So, and then I think we have seen a great response. So, what we do exactly in that is our basic core competency. Our team, we have a close to 20-member team. All of that, most of that team has an expert background in doing real estate investing and lending in organizations like KKR, Kotak, Morgan Stanley, Piramal, etc., Deloitte, and so on and so forth. So we exactly do what we are doing for our prior organizations or even for the institutions. Like I gave you the Oaktree example. There are a few other, I mean, as a firm on a B2B side, we have advised foreign institutional investors to the tune of about $1 billion plus. That's the exact same expertise, exact same ecosystem we bring to certain transactions. These are secure debt transactions. We invest this money into real estate companies and projects, and we use our balance sheet to make that investment. Once that investment has been made, is when we allow these deals to become live on Earnest.me. We always keep 5 to 10% of these deals throughout, but for the balance 90 to 95%, people can look exactly what the transaction is, what is its return, who is the developer, which city is it in, what is the stage of development, what are the risks, and it is their choice. So the whole transaction happens simply on one OTP. But it is like buying any other bond. Like you can buy a Power Finance Corporation bond today or a HDFC bond today. It is just that these kind of bonds, they're more specialized, they're less liquid. That is what we want investors to be aware of. But they offer returns which is in the range of 14 to 15%. So we have seen a great traction. We manage it throughout the life cycle, and that's kind of what it is. So it's another investment avenue for you, for the investors to explore, and if they like, invest.